The Libyan crisis and the earthquake in Japan have put commodities under the spotlight. And I asked Francois Nordhof from BCP why he's still bullish on gold.
We are exposed to gold within our portfolio, client portfolios, and we stick to it. Frankly speaking, the small rebound, the small decline that we had on gold price after the Japanese event was for us a little bit surprising. As even more we had dollar decline against euro, we said, well, there is an issue. All clients which were not exposed, we called them, tell, hey, now you have to enter because gold has its rule, diversification rule, safety rules within a portfolio, within a private banking portfolio. And therefore, we are not only exposed to physical gold within our portfolio, but also to commodities. And we still believe that what happened in Japan, or is currently still happening in Japan, is going to have here a major impact on natural resources prices. And therefore I can tell you, we have 10% of our assets exposed to gold and commodities, which is, I think, the lowest level you should have in the current environment.
And when you say commodities, are you talking a broad range of commodities, or which are the most important?
Yeah, it's a broad range of commodity. Indeed, we have 5% gold in each portfolio, but in addition to that, we had a fund which is investing in the future of the commodity market, looking to avoid also the so-called contango impact, which is for private investor quite costly. You can lose a lot of performance if you are rolling to the short maturities your future contract. So do not hesitate to take a structured product which is based on constant maturity swaps and futures in order to stabilize the rolling impact of the future contracts. It's very important. And you will see what is happening in Japan will have an impact in the long run also, for instance, on the soft commodity side, because the region where the earthquake happened is also a big agricultural region for the Japanese farming, and therefore you will have a stronger import demand from Japan in the very short run regarding soft commodities, food especially.
No one can predict an event like the Japanese earthquake, but what are the big risks in the global economy, say in the next 12 months or so?
Okay, well currently there is another risk. There is the instability risk in a region which is depending on commodities, and it's the Middle East, Near East, Middle East and Northern Africa region. This is for us today a risk, and it's to a certain extent very strange because investors are currently making abstraction of it and saying, Libya is producing only 1.5% of total world oil output. Doesn't matter, it's a small issue, Saudi Arabia can compensate it. Yeah, in figures, yes, but in reality, not at all. It's not the case. It's not a like-to-like exchange, because the quality of oil that was produced within Libya is not at all the same that is produced in Saudi Arabia. Therefore, we will have also some refinery bottleneck or shortage in specific regions for the oil. So this is a risk that we should not underestimate, the political risk in regions where commodities, and currently commodities, are important and are going to be more important. We'll see it with the the reduced exposure to nuclear power generation in favor of natural gas and things like this. A potential risk could be a destabilization of Eastern Europe and Russia, which is one of the big natural gas producer for the European economy.
Francois Nordhof there speaking at the Geneva Forex Event. Goodbye for now.